Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. And guys, Disney stock has been getting annihilated, selling off near and around 10%. I had to throw on my Captain America shirt because it's a rough one, and I think we might need the Avengers to try to save us. But guys, Disney stock down 10%. We're going to be talking about is now the best time to invest in it. You know, we always hear the expression of buy low, sell high, but the last thing you want to do is buy low and have that stock keep selling off. So I hope you guys all enjoy it. Like, subscribe, do what you guys do. And if you want to learn more about trading and investing in the markets, check out my school where we talk about pretty much my strategies, my mindset, how I've been a full-time trader and investor in the market for 6 years, and the strategies that I use in scanners on how to find stocks. We have private group chat. We have private live streams. It's absolutely fantastic. Check it out down below, and code half off for 50% off. And guys, trust me, I know when people think of YouTubers selling courses and stuff like that, they think it's a scam, but guys, I'm telling you, it's different. It's absolutely fantastic. So check it out down below. But guys, let's jump into this here. So looking at Disney stock here, you guys can see that after, the market closed yesterday, Disney stock got crushed. It went from about $119 all the way to lows at $104, which might not seem like a big move, I get, but for a massive company, this move right here is a 12% sell-off here. So, this is billions of dollars of market cap going out the window. Now, what caused this sell-off here? Well, if you look right here, we had an earnings report. This is when pretty much the company comes out and they give you all of the good, they give you all of the bad, and guys, they didn't do very well. Disney stock slid on the revenue and streaming miss. Now, for those of you that don't know, obviously Disney is a giant. They're not like just producing movies or the theme parks. Guys, they have their own streaming service. They have cruise lines. They own so much stuff. They are an absolute media powerhouse. So do I think that this revenue thing is a big deal? Let's dive into this. So looking at it here, Disney posted its earnings for the first quarter on Tuesday here. The entertainment giant beat Wall Street's forecast for the fourth consecutive quarter. Despite seemingly strong report, it shares tumbled 8% at the opening bell here. So let's see why. Disney's earnings per share of $1.21 for the 3 months to March 31st beat the figure of $1.10. So they brought in pretty much $1.21 when Wall Street was predicting they were going to bring in $1.10 on their EPS, also known as earnings per share here. Now, its revenue of $22 billion fell short of estimates. The stock was up 30% this year at Monday's close. The combination of the revenue miss and weaker than expected subscribers for Disney Plus, Disney's streaming business, probably sparked the early morning sell-off, according to analysts. With a decent rally coming into these results, nothing less than perfection was expected to the market. So honestly, people were expecting better and bigger, and Disney kind of fell short of that. They still beat some estimates on their EPS, earnings per share, but a lot of people care about these subscribers. They care about revenue, which is very, very important here. Disney's sales and licensing revenue fell 40% year over year, which is blamed on the lack of box office hits. Could compete with Avatar, The Way of the Water, and Ant-Man and the Wasp: Quantumania, both which boosted figures for the first quarter of 2023. Disney expects its streaming business, Disney Plus, to turn a profit for the first time in the fourth quarter, but total subscriber numbers of 153.6 million fell short of analysts' expectations. So to answer this, guys, I do think here that yes, Disney did fall short, but guys, Disney expects a profitable streaming business in the next quarter, which could be absolute, or not in the next, in the fourth quarter, which could be an absolute huge thing for Disney here. Disney's losses narrowed to just 18 million, which might seem like a lot of money, but for a giant like Disney, that's pocket change. down from 653 or 59 million this time last year. So they are climbing those profits. Profits climbed 12% in the parks division. So like I said, massive company. It's it's the fourth consecutive quarter that Disney has beaten earnings estimates, as Iger, also known as the CEO, battles to show investors that his turnaround plan is working after all. So guys, should you buy Disney? That's everyone's main question. That's why you clicked on this video. That's why I'm making this video. Well, looking at the chart here, you guys can see that Disney has sold off from $200 a share all the way down now to the price near and around $105 a share. So we always hear the expression of buy low, sell high. So for me, I definitely think anything under $100 is going to be a very decent deal for Disney. And the reason why I say that is because once Disney shows profit on Disney Plus, the stock's going to go up. It's almost guaranteed, as well as Disney is investing billions of dollars, for those of you that don't know, into cruise lines or theme parks. And I understand they do have competition in that field, but Disney is a powerhouse. Disney has so many more parks, they have more innovation, and when they start producing higher quality films, which Bob Iger, the CEO, pretty much stated that that's their new focus rather than a whole bunch. He's now choosing quality over quantity, and I think that's super important for both Disney Plus and the box office, which will turn a better profit for Disney. But guys, I think Disney under $100 is a buy. And yes, I do think that we could see some decent volatility from it, but we always hear the expression buy low, sell high. So for me, anything under, $100 a share is going to be a good opportunity to look at here. As we scroll down here, you guys can even see the analyst rating is a strong buy, with the average price target near and around $130 a share. So from its current price, if we go ahead and we draw that out, you guys can see from its current price, if we can get a move to 130, that's a return of near and around 23%, which I will gladly take. So yes, I am going to be buying shares of Disney, and I understand there's going to be volatility involved. It's a growth stock. It's a risky company. They do now pay dividends, which is super cool. So I'm buying it. I don't know, guys. Let me know if you're buying it down below. Like, subscribe, and this is everything going on with Disney. We'll see you guys in the next one. I hope you guys have a fantastic day, and we'll see you guys tomorrow.